Good afternoon, everyone, and welcome to our talking show about real estate and mortgage. My name is Arlindo Machado. I'm a broker and also I'm a real estate instructor and founder of One Way Realty Group. And I'd like to invite and welcome Yuri to be part of our interview. He's the founder of the Vanguard Mortgage. Yuri Baturenko, thank
Hi,
you one more
Arlindo.
time for being here with us. How are you doing today?
I'm good. I'm good. Happy to be here in the studio with you. And hello, friends. Welcome to our little show where we would like to give you market updates and some insights in real estate and mortgage industry.
Very good, very good. So let's jump into that. Yuri, we have people come and asking questions about jumbo loans, jumbo mortgage, and what will be the difference between a jumbo mortgage and a conventional loans. I think you're the best person to explain that.
Oh, thank you. I'll try my best. But basically, jumbo and becomes more and more popular in Florida as the prices of housing grow. Then more and more residential real estate falls into category of jumbo financing versus regular conforming. So basically, jumbo it's everything that is above in value than conforming limit for Fannie Mae and Freddie Mac. And I'll explain. So conforming limit set for 648,200 dollars for 2022. That is the limit of the mortgage that is considered that Fannie and Freddie would buy, conforming limit. So everything that is above that limit, it's they don't buy it, and it's considered to be jumbo, falls in the category of jumbo. There is also something called high balance, but we won't touch it in this video. We can stop separately on that one. So what jumbo, how different the jumbo mortgage is from conforming? Because it is a higher limit, it is more attractive for the bank because they do same amount of work, but they get to lend more, so they earn more interest. So they like it more than the regular. But because it's also not being bought by Fannie Mae and Freddie Mac, so the market for it is like it's less liquid. So that's why guidelines are more stringent. They stronger. They are more how to say that they are more strict. So it is harder to get approved for jumbo loan than for regular conforming. So, for example, if Freddie Mac considers that it's enough of 1 year income for a certain category of people, then for jumbo mortgage, it's just not going to be sufficient. They still would require 2 years, and then other things. So it's as a matter of fact, it's more difficult to get approved for jumbo, but essentially it is kind of based on Fannie Mae and Freddie Mac guidelines. Jumbo loans, they can be based on income in a traditional way where it's full doc, meaning that banks will look at tax returns or W-2s, or they can be non-QM category. I mean, they cannot be non-QM because they're still not being bought by Fannie and Freddie, but they use alternative income verification, meaning it can be bank statement, it can be DSCR, where banks are looking at the potential rent. So all those programs in jumbo loans are similar to regular conforming, but they generally are more strict because of the higher loan amount and because of the market liquidity. Because it's kind of like harder to sell jumbo loan versus conforming loan. So that is basically main difference. I mean, not main difference. It's the only difference. It's like a loan amount, but then because of that, there are differences in underwriting also. And my question to you, Arlindo, in the contract, it is super important in real estate contract when it comes to fixtures that are in the unit and then personal properties. We know that, for example, from my side, I know that banks don't finance personal properties. So if there is a furniture in the contract, bank will force to remove it. So can you explain a little bit where is the difference between fixtures and personal property, and how to draw that line? What can be included and what cannot?
All right, Yuri, great question, my friend. And you are right. We have, some problems at closing because sellers doesn't have a full understanding about what is fixture and what is personal property. And if the agent does not educate the seller about those things, and then we're going to have a problem. Give you an example. First of all, let's give the difference between fixture and personal property. Personal property is anything that's movable, like your furniture, sofa, your TV, all of those things are considered to be personal property. And fixture is something that was a personal property before, and because of the method of annexation, it becomes part of the property. Example, a chandelier. And this is one of the highest problems that we have. A seller has a chandelier installed in his house, and because of the method of annexation, meaning you use the screw to install in your house, now the chandelier becomes part of the property. And because it's part of the property, when you sell the property, it goes with the property. Well, we got to remember one thing. In real estate, everything is negotiable. So if you have any intention to remove any fixture from your property, you need to make it clear to the buyer. And the best place to make it clear to the buyer is at the sales contract, where the buyer and the seller are going to sign it. So if the seller is not aware that the chandelier, because of the method of annexation, becomes part of the property, he doesn't make the buyer aware that he's going to remove it. The buyer sees the chandelier, he falls in love with the chandelier, and he thinks that the chandelier will stay in the property. And the buyer is right, because if the seller doesn't say anything, the fixture has to accompany the sale. Now, what happened? The seller has a chandelier. It's been in the family for 200 years. He's not aware of the difference between fixture and personal property. So when he moves out, he takes the chandelier. Buyer comes to do the walkthrough, look at the ceiling, doesn't see the chandelier, and the buyer says, "I'm not closing." Now, right. What's going to happen? Are the buyer and the seller going to fight? Well, not necessarily. What I tell my agents is to advise the buyer to close, because if you don't close, and you know that if it's financed, the bank makes all the calculation toward the closing date. Yeah. So all the interest that will be paid in advance and all the calculation is done based on the closing date. If we don't close, then the bank needs to redo all the papers, and sometimes doesn't close.
Right. So, and if it goes to different month, it's even harder. And then also documents get expired, and then yes.
So true. And interest rate can go higher, and all of those things can happen. Yeah. So what happens is close the deal, go to court, and then the court will apply a test that is called IRMA, IRMA, intent, relationship, method of annexation, and adaptation. So when the judge look into the method of annexation, then he will say, well, this is part of the property. Then the seller will have to bring it back. So I gave you one example for chandelier, but we have many more. We have a
lot of things, yeah.
Yeah, we have smart switch, smart thermostats. You screw them in the wall, right? And you attach cables to it. Now becomes fixture. Also the water filter. You connect it to the pipes that goes inside the house. So you want to filter every single faucet and showers inside your house. Then you install a filter, and you believe that it's yours because you pay $5,000 to get it installed in your house. So you believe you have all the rights to remove when you move out. Yes, you do. If you agree if you agree before. Now, the listing agent, he needs to educate the seller, and when he's doing the inspection on the property, by the time he's taking the listing, he sees a chandelier, he sees a water filter, he sees a smart thermostat or a ceiling fan. He needs to tell the seller, what are you going to do with those things? Are you going to take it with you, or is it going to stay in the property? So whatever answer the seller gives to you, you put it on the listing agreement, because he might change his mind in the future. So you have it in writing. And then you make sure when the buyer sends you the contract, it states on the contract the part of the property that is not included on the sale, and then you make sure that the chandelier is there as a fixture that is not part of the sale. Buyer and seller signs it. If there's any problem at closing, there won't be any problem, because the buyer signs acknowledging that the seller will take the chandelier. And this is, my friend, a very important issue at closing. We've seen so many different problems about that.
It is, and it's very good that we covered it, because a lot of people, I believe, a lot of people do get this conflicts, and that doesn't make real estate transactions smooth. And then, you know, it's very good information for realtors to be very well prepared and to do right for both seller and the buyer. So yeah, thank you very much, and you explained it very good in a very simple and easy to understand way, but it's super important.
You know what? I'll tell you. I'm an instructor, as you know.
I know. Yes, that's why you.
All the time, and I do meetings with my agents, and I also bring that observation to them every meeting, or at least once in a while, to remind them about the fact that the fixture is part of the house, and if they represent the buyer or the seller, they need to make sure what's going to happen with the fixture before closing. So really aware of those problems, man. All right, let me jump to your next question, because we don't have much time. You know, time flies. All right, let's talk about the market condition for mortgage today. What is going on in the mortgage market today?
There are things that are happening every day. Today was a Fed meeting. They said that, that it was not about rate hike today, but they confirmed that they will keep increasing rates. It's just unknown when it's going to be next one, probably in September. But they confirmed that they will until they see inflation pulling down significantly. Now we have data on the last inflation data. It did go down to 8.5 from 9.1. So that's why we were expecting that they probably will not do next rate hike, but today they confirmed that they probably will. It's just unknown if it's going to be next meeting or they're going to skip one, but they said that they will continue rate hikes. So that's what in relation to the rates. Now, when it comes to the market in general, across the country, we see builders' confidence is going down significantly, and it's back to 2014 level, which is very low. So meaning that builders don't want to build, they're afraid, they're scared, they cannot sell. That is not the case in Florida. In Florida, everything is still good. Inventory is less than demand, still on that pace, which is good for Florida real estate market. Now, what also I would like to mention is that another big lender, Loan Depot, canceled wholesale operations, meaning that they will not continue doing mortgages on wholesale basis, meaning working with brokers. They will only do retail, meaning that they will only take applications themselves and process those loans. So that can be signaling about two factors. First, they have less loans coming in from their correspondent lenders, from their brokers, and that could be one cause of it. And another one could be that they have hardship of selling loans to institutional investors who then securitize them. So both of these causes signal about slowdown on the mortgage market. So again, I would like to stress that this is not in Florida. This is across United States, but Florida is different, and the cause of it is that we have limited inventory, and still people are moving to Florida. Florida is like a prime location for shifting businesses, and then people just move to Florida. So this is not the case in Florida. And now I want to
1 second. Let me just add something to what you're saying.
yeah,
And
absolutely.
you were about to ask me my question, right?
Yes, I was actually going to ask you what is your input on this on the market conditions on real estate in Florida, because I know that you are going to add something exactly to what I was saying. And
Yes. Well, I have a very long answer for that question, and unfortunately, we don't have time to address that question directly. I just want to make a point on what you were explaining. That the fact that in Florida, especially in Miami area, it's still high demand, low supply, so we don't need those types of arrangement. But it's good to know when we get there, we already have a solution for the market to continue to flow, and that's a very good thing. And just to give an idea, market in Florida, especially in Miami area, it's going up, and I have a very good reason for that. But I'm gonna tell you on our next meeting. Yuri, I'd like to thank you so much for your participation in our answering and questions and answers. And I hope to get you back on our next meeting. Guys, thank you so
very
much
good.
for being with us. Yuri?
Arlindo, thank you very much. It's always good to see you. Always pleasure talking to you. You are very good instructor, and you explain everything very well. Thank you very much for that, and hope to see you soon.
Thank you.
Thank
You
you,
too, my
friend.
friend. Thank you so much. You guys